Hello all, this is Mark from financialfreedomandodyssey.com here with another video. Today we're going to look at my portfolio update for the month of September 2025. This marks the 13th month of these videos. So October is now here. It's almost Thanksgiving in Canada, and I'm definitely thankful for sticking to my investment thesis this year, believing in the dollar cost averaging. Complaint-wise, like many months previously, I have continued to notice that SCHD has been lagging behind its index and behind the market, but you can't win them all. And if things do decide to pull back, maybe it will start to outperform or go down significantly less. So September, up. And so far, the US government shutdown hasn't appeared to affect the market at all. Taking a look at the actual indices here, we have the S&P 500 was up 4.25%, NASDAQ 100 up 6.5%. Wow. Dow Jones up 2.43%, and the TSX 60 was up 4.3%. So pretty green across the board. Sorry, I've been battling a cold for a couple weeks here, so it has been annoying, but I can't wait to record these videos any longer. VDY up 5%, XAW up 5%, SCHD down about 2%, and VTI up 3.85%. Okay, looking at my moves, it was another simple month for moves, which is great. I'm hoping going forward that all of my months are simple, and we get into a place where I don't have to do too much rebalancing. So yeah, let's take a look at it. TFSA bought a little bit more AMD with some dividends, a little bit more HXQ with some dividends, and VFV with the normal contribution, which leaves my breakdown looking like so. VFV almost hitting the 20% mark here, and the next highest being VDY, and then a bunch clocking in right around the 10% with XEI Bank. HXQ is slowly ticking up. It'll probably get there soon as well. RSP buys. So yeah, big dividend month. Quarterly dividend pairs such as SCHD and VTI paid out this month. VTI technically in the first couple of days of October, but generally when that happens, I just wait a couple extra days and do my September buys in early October, just so I can take advantage of all that USD coming in from dividends. So yeah, I decided to take all of the dividends plus my monthly contribution and dump it all straight into VTI this month. You know, something we talked about before, it feels strange going all in and having a heavier than normal buy month when stock market's at all-time highs. But, you know, dollar cost averaging, time in the market beats timing the market, and I've done this before and it's worked out well. So no point to break up the pattern now. This finally makes VTI over 50% of my portfolio. I don't have any plans on buying it in the next few months, so it'll probably drop below 50%. So looking at dividends increases and decreases, there's none specifically for my static dividend pairs this month, but I have been noticing some of the fluctuating ones like VDY, SCHD, VTI, BFE, that sort of thing are continuously ticking up a bit higher. Interesting, I just watched a video last night by passive income investor saying that VDY has been going down. The few months that I looked at, that didn't seem to be the case, but I kind of understand what he was saying. Percentage wise, the payer is going down because in a bull market, typically the growth stocks outperform the value and dividend stocks. And since it's a market cap weighted ETF, it would continue to rebalance more of the lower dividend pairs, if that makes sense. So anyways, not worried about it. Everything's looking great. The only one I'm going to call out here is cash. Cash was stagnant at 10.6 cents for the past 4 months, and this month it went down just to 10 cents. So To be expected, both the Bank of Canada and Fed reduced the overnight interest rates, for Fed's fund rate mid-month to, or by 0.25%. Looking at the fear and greed index, we're seeing high neutral. I think that was the same as last month. Yeah, last month in the neutral. If I look at it, date of recording, we are at the low end of neutral, so starting to soften up a little bit there. Taking a quick peek at the AAII investor settlement over the last few weeks. It looks like we've been trending up in terms of bullishness, and we are far more bullish than historical average. So doesn't seem to be too much fear in the market yet. Might be one heck of a year if we end up getting a Santa Claus rally on top of all of the rallies that we've had since the April lows. And to wrap this up here, appears that the markets like the small rate cuts, aren't worried about a recession quite yet, or the US government shutdown. September, like August, like many months since April, has been up, up, up. And, surely this can't also be the case for October, can it? Only time will tell. That's all for this month's review, folks. Thanks for reading, and take care. Cheers.